Hi, Catalina here. This update is for loan officers along with borrowers who are also thinking about buying. I know the value I add the most, or that LoanSense adds, isn't necessarily sharing mortgage news. I do want to go over a few mortgage news items though, because there's a lot of interesting ones coming out due to the changing market. Additionally, I want to talk about what the possible payment pause extension means for student loan borrowers in terms of debt to income and underwriting. And then lastly want to address some of the analysis we've done with additional top 10 lenders that is showing, even from 2022 numbers, how many loans they are unnecessarily declining. That is really, really important to us because we don't need, just because applications are down by 25 to 35%, does not mean we also have to simultaneously turn down more applications than necessary, right? So we are really a solution to help lenders grow their top line revenue by originating more loans coming through their pipeline now. So I just want to put that out there. But let's go through my 3 bullet points. First and foremost, the news, right? Home builders are boosting. I'm going to highlight a few from the Mortgage News Daily here. Home builders are offering more incentives because the pace at which homes are going has slowed down, and so they want to offer incentives. Obviously, everybody has heard the Fed is, talking about hiking interest rates even more. The first-time buyer market is slowing down their pace in terms of expressing interest in the housing demand for first-time buyers. It's retreating here. That's not a surprise at all. But also a lot of talk about recession, right? We hear it a lot, and that we're potentially heading into a recession. So this is what I have to say as well, a consumer myself, personally, first and foremost, is a recession. I mean, a consumer, but also a founder of a tech company. A recession doesn't mean automatically everything's going to fail, or that we're in dooms, that we're all doomed here or something. A recession is an opportunity to, as a lender, to either cut costs or to figure out how to innovate to survive through the cycle, right? Because it's a cyclical market. So it's hard to cut our way to prosperity. And it's more vital that, like, for example, the most innovative products we're building during recession, like the iPod, the iPhone, brands that don't innovate, like Kodak, go dead, right? So there's a huge case to innovate and not to use the sign of a recession to think, oh, I'm going to die, I better find another job or position or another industry or something. But it's time to think about, how do we take what we have, originate more loans, nurture our customer relationships better, and get the loans that are out there, instead of, maybe you won't make as much money as you did in 2020, 2021, but it doesn't mean the business has to be dead either, right? So as there's all this like alarming data on this page, as you can see, it doesn't mean that there's not an ability to survive through this. I want to talk now about why the analysis of our lender data as a result is so important. So we did an analysis for a top 10 lender that has a brokerage channel, distributed retail, and a retail channel. And our analysis showed that they were turning down over $400 million for this year. We did this analysis from January data through July data, and it's projected for this year that they're going to turn down $400 million in origination volume, with the highest percentage in their direct-to-consumer channel from student loan borrowers who could originate if they adjust their student loan in 21 days. So how many loans are you turning down, right? Our current underwriting systems and processes, or our way to assess is this going to be something we can pre-approve or not, does not account for a possible change in DTI in 21 days that can allow a borrower to buy, right? That's changing through our product. We have an API in a way, like a data bridge, in a way to automate the data for every single application that comes in, so you can determine, is this really a loan you should be turning down or a loan you can be originating, right? So that data is hugely important to your organization. It's also hugely important to understand who you could be saying yes to but also who you could be improving purchasing power, even of the applications you're saying yes to. It also allows you to think about how do you be more competitive as other lenders are automatically turning these borrowers down, and how do you provide a solution to help borrowers originate and also grow your referral business and recommendation business and nurture borrowers better, and as a result, increase your top line revenue, right? So I just wanted to throw that out there. Super excited about this additional analysis we did for this lender. If you're interested in learning more about our product, about how we can automate the data and help you understand what loans you could save right from the very, very beginning of the pipeline, and helping adjust the DTI in 21 days and close borrowers instead of declining 20% of additional people you don't need to be declining, and uplift your loan value, please let us know. We have our sales team on standby. I will share their calendar in the description of this video, along with along with the link to our website. Let us know if you have any questions, if you found this information helpful, if you're interested in your own analysis to see what is the uplift potential for your business. We are clearly doing this for lenders, and we want to help. We want to help lenders survive this cycle, uplift their revenue, and ultimately help more student loan borrowers and Americans close on a home and achieve the dreams of home ownership. Let us know if you have any questions. We love questions, comments, and please subscribe.